All right, today we are jumping into one of the most influential and honestly controversial books in personal finance, Rich Dad, Poor Dad. We're going to break down the core philosophy from Robert Kiyosaki, the ideas that have literally made millions of people rethink everything they thought they knew about money.
You know, this quote right here, it pretty much says it all. This isn't about pinching pennies or cutting back on lattes. It's about expanding your world, about building something so big that you can afford the life you actually want to live. It's aspirational through and through.
So how do we even begin to do that? Well, we're going to break it down into 6 key lessons. First up, we'll look at the whole two dads idea that started it all. Then, we'll dive into what the rich really work for. After that, we're going to completely redefine what an asset is, map out where you are with something called the cash flow quadrant, uncover the shocking truth about taxes, and finally, look at what Kiyosaki calls the report card for adults. Okay, so at the heart of this whole thing is a story. It's a tale of two fathers, each with a totally opposite way of looking at money, work, and life. And this isn't just some cute story, it's a framework for understanding two completely different financial realities. And here's the breakdown. On one side, you've got his poor dad, his actual father, a brilliant, highly educated guy who was all about job security and a steady paycheck. On the other side was his rich dad, his best friend's father, an entrepreneur who saw risk as an opportunity and was obsessed with just one thing, getting more assets. So here's the big takeaway, right? Your success in life has very little to do with your grades. Kiyosaki's argument is that our school system is basically designed to create poor dads. He says real wealth comes from financial literacy, from shifting your whole way of thinking from being an employee to being an owner. And that mindset, it leads us straight into our first big practical lesson, what we're all actually working for when we clock in every day. And man, this is where you see the huge split. Most of us work for money. The goal is a bigger salary, right? But the rich, they work for assets. They spend their time and energy building or buying things that will make them money while they sleep. To them, a salary is just a temporary tool to buy more of those assets. Now, this is a total game changer in how you think about your job. According to the Rich Dad philosophy, you shouldn't just be there for the paycheck. You should be there to learn. Kiyosaki tells a story about how he took a job selling Xerox machines, not because the pay was great, but because he was terrified of rejection and knew he had to learn sales to be a successful entrepreneur. The job was his training ground. Okay, so if the whole point is to get assets, we need to be crystal clear on what an asset actually is. And Kiyosaki's definition just cuts right through all the confusing financial jargon. It all comes down to 2 little words: cash flow. Forget everything you learned in accounting. For Kiyosaki, this is all that matters. It's just about the direction the money is moving. That's it. That tells you the whole story. I mean, it is literally this simple. An asset puts money into your pocket. A liability takes money out of your pocket. The end. It doesn't matter what your banker calls it or what society tells you. If it costs you money month after month, it's a liability. And okay, this is where he really starts to challenge what we've all been taught. Your house, the one everyone calls your greatest asset? Well, if you have a mortgage, money is flowing out of your pocket to the bank. So it's a liability. Your car payment, same thing. Even your 401k, he argues, is kind of a liability because that cash is flowing out of your control and straight into the hands of Wall Street. So how does this all fit together in the real world? Well, that brings us to one of Kiyosaki's most famous ideas, the cash flow quadrant. Just think of it like a map that shows you exactly where your money is coming from. So you've got this quadrant, right? 4 sections. On the left side, you have E for employee. That's when you have a job. And S for self-employed or a small business. That's when you own your job. Now, on the right side, you've got B for big business. We're talking 500 plus employees. And I for investor, where your money is working for you. And the difference between the left side and the right side, it's everything. People on the left, the E's and the S's, are basically trading their time for money. But the people on the right, the B's and the I's, they're capitalists. They build systems that use other people's time and other people's money to generate their income. So the whole point of this quadrant is to make you ask yourself a really honest question. Where am I on this map right now? And more importantly, where do I want to be? The entire philosophy is about finding a way to move from the left side of this quadrant over to the right. And now we get to the real kicker, the punchline. Because where you are in this quadrant isn't just a philosophy. It dramatically, and I mean dramatically, affects your single biggest expense in life, your taxes. The rules of the game are completely different depending on which box you're in.
So let's just lay it out there. How does your spot in this quadrant, your financial address, actually impact what you hand over to the government every year? Well, the answer is a lot. Okay, just look at these numbers. They're pretty typical. If you're an employee, an E, you're probably paying around 40% in taxes. But here's the shocker, the S quadrant. The small business owner, they often get hit the hardest, sometimes paying up to 60%. But then you look at the B side, the big business owner, and that rate drops to about 20% because the government gives them incentives to create jobs. And the I quadrant, the professional investor, get ready for this. What do they pay? Potentially zero. Yep, 0%. Because they understand how to use debt and depreciation and the tax code to legally wipe out their tax liability. That's the ultimate goal. Okay, so with all of this in mind, how do you actually keep score? How do you track your journey from the left side to the right side? It all comes down to our final lesson, and it's about the one report card that really matters, the one that schools, funnily enough, never teach you about.
Think about it. School teaches you a lot of things, right? But it's really designed to teach you how to be a good employee. It'll teach you about the periodic table, but it teaches you absolutely nothing about an income statement, a balance sheet, the actual language of money. And that really is the last most important idea here. Your financial statement, your income, your expenses, your assets, and your liabilities is like a mirror. It doesn't lie. It's a report card on your financial habits and your financial intelligence. So the question Kiyosaki really leaves us with is this. If you held up that mirror to your own finances right now, what story would it tell?